Apple shares ticking lower after net sales rose 5% for the quarter, thanks to strong results from the company's iPad and services revenue. Apple's most important business here, the iPhone, beat expectations for the quarter, but saw a 1% decline from the year prior. Here to break down the results, we've got Michael Ng, who is the Goldman Sachs Senior Equity Research Analyst. Michael, great to have you here in studio with us this morning.
Thanks so much for having me.
Let's dive into these results. What was your read here? Any surprises that jumped out at you, especially considering what the broader consumer environment is like right now?
Apple ultimately had a very good quarter. When we look at Apple's results, it beat consensus expectations across all of the key KPIs. That's revenue, gross profit, operating expenses, EPS, free cash flow, and buybacks. iPhone revenue was down 1% on a reported basis, but it was actually up 2% on a constant currency basis. Services revenue grew 14%, showed continued momentum, and the guidance was a little bit better than expected for the September quarter. Up 5% year over year, they guided to services revenue to about 13%. That implies about 2% products revenue growth and implies continued iPhone strength. Ultimately, we think this keeps the bull thesis alive and well, which is really about an earnings acceleration and a step up in normalized earnings power, really supported by the upgrade cycle for the iPhone.
Michael, how big of a game changer do you think these AI features are going to be when you talk about the strong guidance, what we are expecting here for this next iPhone cycle? I guess more specifically, what do you think that could potentially look like here for Apple?
Yeah. I'm really excited about the AI features that are going to get rolled out for the iPhone over the next couple of years. In the fall of this year, Apple's going to start rolling out Apple Intelligence for its iPhones, and they're going to expand to more regions and more languages over the course of the subsequent year. One thing that I think is underappreciated a little bit is that in addition to the AI features that are going to help drive consumer demand, there are also going to be fairly substantial form factor changes over the next few years. So for instance, this year we're expecting the iPhone 16 Pro and Pro Max to have a larger screen size. Next year, there are some press reports about a thinner iPhone for the iPhone 17. And the year after that, we're hearing rumors about the potential for a foldable.
No, we don't want that, Michael. Come on.
If you want bigger or thinner or a foldable, Apple's there for you.
Really? Okay. I mean, it seems like Apple is always in this kind of not necessarily full on wait and see, but it's strategy that we've seen from Tim Cook, right? Wait to see what the market is demanding and see exactly how much of that market share you could capture, especially given the install base that you already have. Does Apple need to be first in any of these major investments that they're making right now?
I think when you look at what's happening with AI, it's really illustrative of what you're just asking about. You know, I think for the first half of the year, Apple was viewed as this laggard to AI, right? And after WWDC, I think the markets really changed their perception of how Apple fits into the AI landscape. And to no surprise, you know, people are beginning to adopt the view that Apple's in a really good position to bring AI features to the masses. I mean, it makes perfect sense that the largest consumer hardware company in the world is going to be the one who brings AI features to most consumers. You know, Apple's tagline during WWDC, where they announced Apple Intelligence, was AI for the rest of us. And I think that's what's happening here.
You know, we were so willy-nilly to talk about NVIDIA being a $4 trillion, $6 trillion, $10 trillion company at some point. I mean, Apple's the one right now that's sitting at about a $3.3 trillion market cap and is now kind of taken back or at least gotten more competitive against the likes of NVIDIA. When are we going to be talking about Apple getting to a $4 trillion or $5 trillion type of market cap here? And what would need to happen?
Yeah. I think what we need to see is we need to see a step up in earnings power. And, you know, I think there's been a perception in the market that iPhone units are cyclical. Mid-cycle units were probably closer to 225 million. Our view is that it's going to steadily step up. 250 million plus is the new mid-cycle outlook for iPhone shipments each year. And that's really going to be catalyzed by the AI features and some of the form factor changes that will bring up that earnings power. And you're going to have services attach and services momentum to drive those earnings higher.
Michael, real quick, there's a lot to like in this report, but China obviously still remaining weak here for Apple. How big of a risk, how big of a challenge do you see that being in the immediate term?
Yeah, I mean, China was admittedly a little weaker than expected. Revenue was down about 6.5%. On a constant currency basis, it was down closer to 3%. What I would highlight, though, is that the trend is getting better, right? So if you look at the March quarter, China revenue was down 8% year over year. If you look at the December quarter, China revenue was down 12% year over year. So things are definitely getting better in China. And to be clear, China is always going to be a little bit of a concern. It's the most competitive market that Apple operates in. But we think that the trend is improving.
All right.